My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. We're almost done with this heinous month. And as far as I'm concerned, it can't end soon enough. Even at today's bounce, Dow gaining 359 points, S&P climbing 1.60%, NASDAQ pole vaulting 2.26%. September has still been ugly. I've been warning you that this is historically the worst month of the year ever since August ended, replete with a nasty 10-day close, and that's precisely what we got. But now that September is almost over, let's focus on the future, meaning next week's game plan. It starts on Monday when we get results from the mighty Thor Industries, THO kind, which dominates the RV and motorhome industry. When the pandemic first hit, Thor sold off hard as investors figured that we'd have a normal recession, and in a recession, RV sales get slaughtered. Sure enough, we got a slowdown. We got mass unemployment, but we also got an incredible boom in the RV business because these things represent one of the only safe ways to go on vacation. Since then, Thor stock has soared, although it tends to pull back every time people get excited about a potential vaccine. I like this one. I'm betting RVs remain a vacation staple for a lot longer than you might expect. Tuesday, we hear from two companies that could potentially deliver upside surprises that might turn your heads. The first is McCormick. That's the spice maker you know that I've always been a fan of, right? And then there's Micron, which is the chip maker, which is a little more controversial. Last time McCormick reported a fantastic lights-out quarter and the stock exploded higher, but then it flew too close to the sun, and so far this month, what it's done is pull back from 211 to 191. But remember, September's been bad. And right now, it's only slightly above where it was before that great quarter. Right now, Wall Street's obsessed with what will happen when the pandemic comes to an end. Will people still cook at home with McCormick spices? Will they still use as much Frank's hot sauce? I said, wait a second. People have developed new habits. In many cases, they discovered they like to cook. Meanwhile, the food service business that hurt McCormick last time, it has improved. To me, that smells like another upside surprise. Though at this point, the analysts, they might not care and they might not get behind it. Micron is really, really difficult to get to. See, this is a commodity semiconductor play that sells a product with not so hot pricing right now. Micron's core DRAM business could be saved by their disk drive business. But I don't see the stock roaring unless management says they see tightness coming in DRAMs. Oh, boy, then you'll get a terrific move up. You'll say, why didn't Jim just tell us to buy it? Tuesday night, we get the first debate. That's between President Trump and Vice President Biden. You know what we're going to be doing here? We're going to be watching for any stock market implications, including any talk from Biden about raising the capital gains rate, something that seems likely if Biden wins and the Democrats also take the Senate. Wednesday, we'll take the temperature of the housing market. This is the hottest part of the economy out of the cloud. As long as mortgage rates remain low, I think we'll keep seeing strong home sales. But there is one problem. There's not enough homes. Not enough homes for sale. Lots of people worried that the home builders have peaked. I don't think that happens as long as there's that the supply is tight. That means that the stocks are cheap. But you see, if there's a shortage of homes and they don't have enough inventory to capitalize on it, well, then they're going to get clobbered. So it's time to be a little selective. Don't just buy the group. The two that have the supply situation under control, in my view, are Toll and D.R. Horton. They're the ones that make the most sense at this point in the cycle. Although I've always been a fan of Lennar for a decade. It's just that those are two that right now seem more on point. Thursday is the official start of earnings season, and we're about to get results that reflect another 3 full months of COVID-19. As always, PepsiCo gets the ball rolling, and I expect very good things here. That's why we own Pep for the Charitable Trust, which you can follow along by joining the ActionAlertsPlus.com club. Now, this stock's down 14 points from its February high. It sports a 3% yield. I think that means there's less downside risk than most with interest rates so low. Plus, I'm betting PepsiCo's having a terrific quarter because their Frito-Lay business is the snacking. And we are snacking like crazy from home, right? The work-at-home people, they can't stop eating Frito-Lays. I like this one ahead of the quarter. I'd buy it. We also hear from ConAgra, CAG, and I like them too. I'm betting their frozen food business is incredibly strong right now. Millennials love it. I have less conviction, though, with ConAgra, in part because it only yields 2.4%, even as the stock is much cheaper on an earnings basis. Still, at these levels, I'm on the sidelines for, let's just say, its lack of longer-term consistency. Then there are two more stocks that I need a better read on. Constellation Brands, STZ, and Bed Bath & Beyond, BBBY. Constellation's beer business is killing it with consumers, even as bars are closing at a frightening pace. Doesn't matter. The consumer side of the business is much larger. Constellation has the fastest growing portfolio of beers, including Corona and Modelo, along with a rapidly growing spiked seltzer biz. I suspect they'll have a good quarter. The lately it feels like nothing these guys do is good enough for the stock. I mean, it doesn't seem to matter. I mean, I always want to hear about their investment in Canopy Growth, the Canadian cannabis business. But right now, that whole industry comes down to a Democratic sweep in November, coupled with Biden changing his mind on full legalization. Canopy's home base in Canada is just too saturated. Go read that Aurora Cannabis, and you'll know what I mean. Read that conference call. It's terrible. As for Bed Bath & Beyond, this one's difficult because it's a turnaround story. Turnarounds are tough to pull off, even in the best of times, and they often lead to disappointment in the worst. I think CEO Mark Tritton's doing an amazing job. And Bed Bath sells housewares, one of the strongest categories in the entire economy. We heard that from Jeff Gannett the other day from Macy's. But this company never spent enough on digital, and Triton's still in the process of improving its once terrible cost structure. Honestly, I'd be willing to take a chance on Bed Bath. If it's not for one thing, I'm going to try to explain this as simply as I can. The stock has had a huge run in the last few weeks, and if it keeps climbing in the quarter, I think it'll come in too hot. I have been a big believer in this turnaround, and from when it was, say, at 10, 11, and I'm not going to give up on it now, but the bar is very high thanks to this recent rally. Plus, Bed Bath is very heavily shorted, people betting against it. 60% of the float is short, which is insane. And those shorts will try to foment panic by slamming the stock down after the quarter's announced. Just wait and see. The numbers will come out. The shorts will blast it even before the conference call. And it could pull back hard as people think, wow, must be a bad quarter. I want you to be ready for that possibility. Watch carefully, because if the shorts do push Bed Bath to a low level, low teens, say, after a solid quarter, then I'm going to come out here and say you got to buy it. Finally, on Friday, we get the Labor Department's non-farm payroll report. As the clock ticks closer for the election, this employment data gets more and more important. I think Friday's number will disappoint because we haven't gotten any more stimulus, and we're now experiencing a second wave of COVID. Maybe it won't matter as much as it usually does because this is a highly unusual election between the pandemic, the protests, sometimes turning to riots, the empty Supreme Court seat, and, of course, the Fed trying to keep rates as low as possible. But the unemployment number is very weak. It will absolutely have an impact. The bottom line, we're finally kissing the month of September goodbye next week, and I say good riddance. I don't know if October will be much better, but I doubt it could be much worse. Let's go to David in New York. David.
Hi, Jim. How are you?
I am good, David. How are you?
I have a question regarding Cisco Corporation. I've owned it since June of this year. When I bought it at $63, it has bounced down to the low 50s and then up to 68 in recent weeks. Now it's 62. What's your assessment of this company in view of the current environment with food distribution and closed restaurants?
Right. Well, that is my worry, sir. I mean, first of all, it's a well-run company. Second, that dividend is big. At almost 3%. But I am going to have to defer because I see so many restaurants going under. As we get into colder weather, it's just going to be worse. So I'm going to have to say, no, this one is not for me. Let's go to Brandon in my home state of New Jersey. Brandon. It may not be Brandon.
Hello?
Is that Brandon?
Yeah, it's Hayden.
Hayden.
No, it's Hayden.
Excellent. Hayden, what's going on?
And I'm in Kentucky. But anyway, my question is on Reynolds. I heard about it whenever you first brought it on several months back. Made a little money on it, and I sold it a while back. But after earnings, and I've seen it's just been dropping down like 8% in 3 months. Wondering, do you think it's going to be?
These stocks are not. Hey, I'm going to tell you, these stocks are not working. Okay, when I say they're not working, what I mean by that is that people have decided that these soft goods, that these are pantry stocking companies, and we're not doing that anymore. So therefore, people are letting these go, and I'm not going to get in the way of that maelstrom. Michael in California. Michael.
Booyah, Jim.
Booyah.
So as you likely know, legendary big wave surfer Laird Hamilton and his company Laird Superfoods just went public. Given that industry is trending more towards health-conscious foods, do you think consumers should ride the wave or let this one pass? Thanks a lot.
Yeah, I know. I know I sound repetitive, but I like Beyond Meat. That's the one I like. I just think that you don't want to have a million chits in this game because then you're going to end up with like a UNFI that blew you up or a Hain that blew you up. And I don't want that. I have faith that Ethan Brown is going to deliver Beyond Meat, and that's what I'm doing because that is the best in show. And I have always been a best of breed guy no matter what. All right, September's been ugly. Thank heavens for today, but it's been ugly. But we're almost done. And I don't think October could be worse. Well, Mad Money tonight. As people look for ways to get out of the house but still stay isolated from others, could a company like Brunswick make sense here? Yeah, the boating company. I'm talking with the CEO. Then the next tech debut is on deck. It's Palantir. It's set for a $22 billion thing called a direct listing. We'll explain. I'm talking about what to expect. And should you buy the stock of Costco in bulk here? I'll tell you how the wholesale club's business is made for this moment. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.